A client of mine asked me today, have there been more cancellations lately in the marketplace? And if that's the case, why would it be? Now, I have not looked at the data here, so I'm not sure if there are more cancellations. There's sort of a randomness in the market. And I don't know, for the buyers that are canceling, I don't know each one of them what the true reason is. But I do have a theory why some buyers might be canceling or might feel they want to cancel. And that is worth discussing today, and that's the tug of war that every buyer is going through between FOMO and FOL. FOMO is FOMO, that's the fear of missing out, and FOL is FOL, which is the fear of loss. And FOL, the fear of loss, has been ruling our brains since our ancestors started roaming the planet 200, 300,000 years ago. It has been a useful survival skill. And the fear of loss is actually far more dominant. That's how our brains are wired. It's far more dominant than the desire to win. And there's been studies done on this, and there's a good book written by Daniel Kahneman, Thinking Fast and Slow, I believe it's called, and I recommend it. So what happens is that it has been shown that the tug of war between FOL, F-O-L, fear of loss, and FOMO, the fear of missing out, has been so conflicting to our brains that we tend to wreck our financial decisions based on being torn in two different directions. And that's evidenced in the fact that most people, the majority of people that invest in the stock market, for example, have been underperforming the stock market as a whole. And it's a function of people trying to time the market, which never works. Let me say that again. Trying to time the market never works. So if we look at the long-term historical trend of Hawaii real estate, and also the long-term historical trend of the US stock market, we recognize it's been going up and up, maybe not in a straight line, but the long-term trend is going up. And that's good news. So that's data that would suggest it's a strong market. But when we buy into the market, if we look at it today, we have FOL, F-O-L, the fear of loss, because we think that today we're certainly closer to the peak of the market than at any point in time before, if not right at the peak. And we have the fear of, okay, maybe this is the peak now, and from here on it goes down and we lose money. But that fear actually has been the case for any investor that bought into the market at any point in time, 2 years ago, 5 years ago, 10 years ago, 20, 30 years ago. In fact, it's a nature of a rising market to get the impression that we're always closer, if not at the peak, compared to where we have been in the past. So that's one factor. Now, lately, we have an environment where FOMO is running rampant. So FOMO is the fear of missing out. And it's caused by a couple unique factors in the marketplace. We're coming out of COVID. We have a strong economic recovery that is turning into an extension of the economic expansion. Everybody's flush with money. The Fed is committed to high liquidity in the marketplace and super low interest rates, record low interest rates. So increasing demand is chasing dwindling supply. Supply is being gobbled up, and multiple offers are being received by sellers. And interest rates are at record low levels. We talked about it in another video. The real rate is actually below zero, considering the tax benefits and the rate of inflation. So people recognize the opportunity to get into the market and lock in a super low 30-year fixed rate in today's market environment. And what might happen is that that a buyer might offer on a property. Let's say he offers full price. He didn't get the property. So the next suitable property comes up because the seller receives multiple offers and accepts a higher offer. So the next suitable property comes up, that same buyer might offer above full price. And let's say seller again receives multiple offers and the buyer doesn't get the property. So FOMO really kicks in now, and that buyer is driven by the emotion of, I don't want to miss out again. That buyer goes in aggressive on the next property and offers above full price with an escalation clause. Let's say buyer is willing and able and prepared to offer 2,000 or 5,000 or even 10,000 above any other bona fide offer received. And let's say the seller accepts. So congratulations. Seller gets back and says, you have the winning bid. We received multiple offers. You have the winning bid. So for about 5 seconds, that particular buyer is going to celebrate and say, yay, I finally got it. And then FOL kicks in, the fear of loss. That buyer might think, well, wait a minute. I paid more than anybody else at any point in time. I paid now the highest price for this type of property compared to any previous time. And maybe I'm buying right at the peak of the market. And from here on, the market's going to turn down and I'm going to lose money. And that's FOL. And sometimes buyers buy on emotions, and then they try to justify based on logic and reasonable thinking. And FOL can cloud our mind the same way FOMO can cloud our minds. Those are emotions that can be detrimental in financial decision making. So that could be a reason why some buyers are canceling. Now, I do not believe we are close to the peak. In fact, the market could run for an extended period of time as long as interest rates stay low, in particular for condos. For single-family homes, perhaps we are reaching a plateau here. But who am I to say? I don't have a crystal ball. If you do have a crystal ball, let me know. I will take a look at it, and that would be great. We will, however, keep you posted with market updates. For more real estate stuff, go to howiliving.com. Until then, mahalo and aloha.